Welcome to the Treasury Update podcast presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in. On this special episode, we share highlights from our 2019 Fintech Hotseat Panel Discussion live at the AFP Conference in Boston. Moderator Dave Robertson, Managing Director of Deluxe Payment Advisory Solutions, joins Rick Burke, Head of Corporate Products and Services at TD Bank, Brian Greehan, VP of Bottomline Technologies, Ajith Thekadath from Visa Business Solutions, and Craig Jeffery, Managing Partner of Strategic Treasurer. They discuss significant increases in payment volume, sustainability, real-time payments, and complexity of payments. Listen in and enjoy the discussion.
Let's switch from the recent patch now and let's look out 3 to 5 years. So for the corporate practitioners, for the banks, for the fintechs out there, what do you see as really the key trends that are going to drive change in the B2B payment space? And why don't we begin with, we'll begin with the banker, Rick.
Thanks, Dave. So the first thing that I think about, and I try and talk about this as often as possible, is I project, and I don't think I'm alone in this, just a vast increase in the volume of payments that need to be done. At the same time, less and less interest in getting them done or how they're done or initiating them, but that there's going to be more. And you can point to just a couple different things. So the effects that the gig economy is having with sort of more frequent payroll. I'm willing to go out on a limb and say that in the next 5 years, certainly within the next 10 years, the large majority of folks that are in this conference today are going to be paid on a daily basis. And I talked to lots of folks, particularly payroll companies, who really want me to go away, and they don't really want to think about that. And they can tell me all the reasons why it would be virtually impossible. It's federal withholding and everything that goes along with it. But I just can't see us not having that happen. So when you do that, like if you go from being paid twice a month, say, to being paid 20 times a month, that's a massive increase in payment volume in a very specific space. But then once you're paid every day, wouldn't it be like in everybody else's best interest that wants to be paid by you to get your money when it arrives every day? So, mortgages will become sort of daily pay, your car loan, daily pay. And so the volume of transactions, this is going to increase sort of just exponentially. And historically, that's an awful lot of opportunity for us to mess it up from a processing standpoint. And so we have to have bulletproof systems to make sure that that works. And it's not going to be about, I can't possibly think about, it's sad enough to write one mortgage check a month, but to have to write 20, and by the way, when I say 20, that just shows that I can't even think about a 7-day-a-week banking system. So I think volume of payments is a really, really big thing. And then all of this talk about real time and what does that really mean? I'm coming to believe that potentially the most important thing about real time payments will be requests for payment that don't get paid in real time. Those changes, I think, are going to have a very significant impact on where our focus is and what has to happen as we look out into the next few years.
Well, and thank you for that Halloween costume idea of the daily mortgage payment. I appreciate that. It's pretty terrifying. Ajith, you want to jump in?
Yeah. No, I think for the next, if you look at 5-10 years, to add to what we were just talking about, we're looking at a digital economic marketplace taking shape, and everybody, including corporate treasurers, are participating in it, is my perspective, because there's a lot of value to be derived bidirectionally, both for a corporate practitioner who is practicing in a corporate environment, but banks are also participating. So from Visa's perspective, we've always looked at and saying, hey, wouldn't it be nice if we could be the orchestrator of a global digital economic marketplace where corporate practitioners, banks are equally participating and contributing and deriving value. And by that, I mean, the corporate practitioners might be giving in data into the banks, and there's a central repository where everybody is deriving data, because data is a ongoing challenge in our marketplace. And I think that's going to revolutionize over the next 5-10 years, because the cost of storing data is getting significantly lower, and the people who can get into a cloud environment are evolving very fast. So if there's an economic marketplace, illegally binding, I would say, where everybody is tied into a certain standards and specifics, I think it'll be a seamless experience across, and payments as a standalone will go at the background, but how we exchange value and derive value out of that marketplace is where I see ourselves going in.
So I agree with everything that Ajith and Rick have said, and I don't want to ruin the panel, but I'm going to go to a slightly darker place. When I hear the question of what's going to happen in 3 to 5 years, I look around right now and just with the economy and the investment that's just pouring into the B2B space. And again, I don't want to be cynical, but right now you look around, it kind of feels like everyone's a winner and like everyone gets a trophy and it's just going really, really well. Over the next 3 to 5 years, at some point, that's going to shake out, right? The investment dollars are going to go away, and you're going to start to find out who's a real provider, who's not, who's sustainable. And so it'll be interesting to see where that, I think, nets out in 3 to 5 years. And then also, so Rick could talk circles around me with real-time payments, but you kicked off by saying everyone's talking about it, but no one really, a lot of people don't really know what to do with it. So I'm really curious, like, what's going to happen with that, right? Like, where's it going to go? And then Visa, you think about something like B2B Connect, which, I mean, talk about like an ambitious, lofty project, right? That's not tweaking something that exists. That's creating something that didn't exist, challenging something that does exist. So where's that going to go? So next 3 to 5 years, I just think in 5 years it's going to look very different than it does today with some different players involved.
So we are to understand that we're going to have to pay our mortgages every day, and we're not going to get a participation trophy. I don't think we can get any worse than that. But two things to follow Rick's lead on the two-thing idea is, the next 3 to 5 years, or I think Ajith expanded the horizon to 10 years, so whatever, in that time frame, 3 to 10 years, two big influences are going to be fraud. The attack on the payment system is massive. That is going to require corporates in particular to strengthen their interface, the payment process. That's going to have to be hardened dramatically. The level of sophistication is going to impact that. And what is now considered crazy secure will be considered standard. So that's going to change. The second has to do with, none of us mentioned SEPA as an influence on XML. I think if you let us come back a second time, we'd include a couple more. But the use of XML for payment formats is going to go from, leading, required in Europe, adopted and leading in the U.S. to mandatory or standard within that 3 to 5 year period, because MT101s, MT103s, those are not going to continue to exist without being translated in the very, very near future. This is not 2030. Some of the MT messages, the old standards, are not going to continue indefinitely. That's going to create change. It creates opportunity because they're much better, but we've seen a couple of times where the influence of regulation has helped. SEPA has helped with adoption. Getting rid of some of the MT formats on the SWIFT platform will help people update. And so this will drive the technology that supports the underlying payment systems will help. Those are a couple things. I don't know if that's controversial or not, but it's not as scary as the paying your mortgage every day.
Yeah, but the cybersecurity thing. So after I finished, I was like, there was really 3 things. And so it's great that you brought cybersecurity up. And I think sort of what that looks like in the commercial space versus what it looks like in the consumer space. So, in this survey that we do every year, year upon year, like no one is willing to say that, risk from a fraud perspective has plateaued and now it's going to decline. So everybody expects it to be as big a deal and a bigger deal in the coming year. And then when you talk in the corporate space to people about, so how are you helping to protect your own company's assets? Like what do you do with your own staff and how do you train them? And not generally, but sort of half the time these days, it's getting better, but still about half the time, folks sort of look and say, well, isn't that my bank's responsibility? And people are a really key part of sort of how security works. And so I think there's going to be a lot more focus in the next few years on how to help people protect themselves and their own organizations. In the consumer space, we'll sort of go overboard and try and do it for them. So tokenization and trying to find security in ways that sort of takes it out of the human's hands. But I think in the corporate space, we're going to be expecting people to do a lot more to protect their company's finances and assets.
So Rick, as you were saying, like we're seeing across our products, right, like fraud mitigation and risk mitigation is the catalyst for our innovation and then also for clients adopting it. And if you look at the Treasury market, I came again from a large FI, so many conversations with an end user or a corporate were tied to rebates and cost reductions and automation, all that still sustains, but it's so much of it is around what are you going to do to protect our assets, and it's really been a shift.
Yeah, to those points on security, we did a massive research from Visa's perspective in the April-May timeframe. To Rick's point earlier, the global research working with treasurers and financial institutions, the overwhelming response was, how are you going to solve the problem of fraud? I think the notion we have talked about, to earlier point about identity and how we are tokenizing data, to Rick's point, that's going to be a norm. To add to what will be the horizon in the next 2 to 5 years' time, I think we haven't really thought about from a financial marketplaces that are forming in digital ecosystems. For corporates to have a digital identity is a notion that we truly believe in from a B2B Connect perspective, and I think that's a place where we see trying to play in the role or anticipating the role of fraud with real-time payments, and how can we mitigate that upfront by tokenizing all the banking information into a digital identity. I think that's going to be there coming soon as well.
Each of you have described an environment of incredibly rapid change, potentially winners and losers, putting forth different network propositions, and intensified risk. So for the corporate practitioners out there, what should they really be doing to prepare for this future? What are a couple things that you would recommend that they really focus on?
My guess is sort of like guidance counselory more than it is, very specific. But it's more about just getting out. I think the ideas of being a corporate practitioner, or for that matter, a banker, which we'll get to, and that you can just learn where the market is going and the technologies that are available and the consumer's expectations by going to your office every day, sitting at your desk and just executing on the job, are not going to get it done. If you look around even here, right, you have to go to events like this one. You have to read on the industry trade publications, and you got to just see what's happening, because it's happening at a dizzying pace, and you got to know what's out there. And I think that challenges the day-to-day corporate practitioner.
So the shiny object these days is speed, and potentially sort of, I mentioned the volume of payments, but I think it's the shiny object is speed. But I would encourage people sort of in the guidance counselor role to focus on data, not on speed. I think right now it's causing a bit of confusion, because a lot of corporate practitioners have processes that have been in place for a long period of time. Many of them have sort of environments that they're not really anxious to make a lot of change to. And so when they think about speed, they struggle to think about, well, how will it make my life better? Like, I have a general sense. I do a dashboard every day. I know what my cash position is. I have a sense of what it'll be for the next couple of days based upon the time of the month, and I can schedule my payments in advance, and I can get them done very cost effectively via the ACH, and there's nothing wrong with the ACH network. But at the same time, what about the data, right? And I think that if you focus on the data, you can make real market change, real solid improvements to sort of your cash application environment, to your payments environment, to your payables environment, in terms of trying to make sure that as much as possible gets done in a straight through environment, and speed will take care of itself. So focus on the data.
Change is coming. I think it's how best we can shape it and partner and collaborate in a cohesive environment to embrace that change. Every corporate customer treasurer has an end user client. How are you enabling this experiences for your end user clients to be enhanced, in many folds? I guess, the expectations are not going away. It's only going to increase. And from every corporate treasurer's perspective, you have an end user client. So any of this data or digital identity, real-time payments that the infrastructure providers and the bank institutions are providing, how are you going to translate that into your own environment to significantly enhance your overall client experience? I think that's coming. It's how we create internal business cases to upgrade and run with new infrastructure to deliver those experiences downstream to your clients. Because if your infrastructure will be a bottleneck, because the industry is changing. I know we've talked about this change for some time, but I think we are in that crux moment or tipping point where real-time payments and rich data is coming. But how are you going to use it? How are you going to maximize it and enhance that client experience will be the journey that we want to go.
Just a couple thoughts as I hear you guys stealing all the ideas that I was going to say. But so I want to say something different because of that. The idea that payments are getting more complex. The complexity around payments is increasing. You have more underlying systems on the corporate world. You need visibility. you're dealing in more currencies because the economy's more global. Payment frequency will increase. People want more visibility. And there's a partner on the other end that has a business process. It's not consumer to business. So it has to look different. And with the onslaught of fraud, automated fraud attacks, we have to think differently. So that's the advice to corporate practitioners. We have to think about the new environment of increased complexity among all of these different dimensions. And there's also benefits coming with technology, new payment rails, new methods. And so if we think end-to-end security, end-to-end information, end-to-end efficiency, then we can be in the right place. So we can start to stick those things we hear, whether it's Swift GPI or B2B Connect, we can put those things in our grid and say, how does that help our organization? How does that streamline? How does it address this whole set of concerns? And I think that's where the real opportunity is, where it's far better than for consumers, because the business process from start to finish has many more steps than a consumer, many more approval layers. And I think if we add what we know as consumers, with that environment that I just mentioned, I think you'll do much better at that.
Yeah, I think that's a great point, because there's kind of a focus on these payment networks, but there's an underlying commercial or financial transaction that needs to be addressed end to end. So let's switch things up a little bit. Rick and his team of bankers is constantly out there advising their clients. Now let's have you guys advise Rick. So Craig, you're working with the corporate executives that are actually choosing which banks to do business with. So your opinion carries a lot of weight here. What's your advice for bankers?
Yeah, I thought it was my advice to Rick, but to bank,
he can share it if he wants.
So we talked about the background in terms of what's changing in terms of complexity, the changing environment, changing backdrop, security, new payment types. And as a banker, Rick and other banks have to look at, we have a lot of different customers. You have a lot of different customers who have a different set of needs, and they're going to have to transition over time. So that means you have to have multiple solutions or ways of reaching out to your customers. How do you bring, instead of making them come to you for everything, how do you reach out into their systems is one point. How do you address the different needs? What are the different needs? Know your customer onboarding. Well, the power of a network helps. The power of multiple networks help. How do you handle different formats? Handling translation services so that they can do it. And that's just the start. There's a lot of complexity that Rick has to deal with. You've got to look at a multiple solution. It's not one or the other. It's usually going to be multi-solution and integrated. The open banking, open connectivity, I think is a key to solving the puzzle.
Yeah, so the concept of complexity, so what keeps a banker like me up at night? It's complexity. We maintain some slides that you use for various decks here and there and whatnot, and there's this one slide. It's just a wheel, and it's intended to show sort of what does the treasury management team provide, what kind of capabilities, how does it help its customers. And so part of the wheel is receivables, and part is payables and investments and information, and then sort of outside the wheel are all of these specific services that are offered. And so we have two versions of this slide. We have sort of the mid-'80s version of the slide, and around the wheel there's a lot of white space. And we have the today's version of the wheel. And you can hardly fit another letter in around the wheel because of the number of capabilities that are there. And then when you think about, sort of speed to deployment has, what fintechs have taught us is that you can go faster. You can go remarkably faster. And that leaves a lot of room for a lot more ideas to come to market. And so it's only going to become more complex. And so how do you possibly deliver, as an individual, if you're a treasury management sales officer, you used to be expected to know all of those 12 things that were around the wheel. Now the 85 things that are around the wheel. So you have to deliver in teams. You have to be willing to collaborate. You have to be in partnership with your customer. And those are all non-technical things. This is all sort of cultural and behavioral things. And I think that's the kind of thing that also keeps me awake. I sleep pretty well, but if I am awake in the middle of the night thinking about work, that would be one of the things that I'm sort of drawn to.
And Brian, you mentioned earlier how the lines between fintechs and banks are blurring. Ajith, you talked about that collaboration. We're all coming together. But as you think about banks and as you think about fintechs, and we have banks and fintechs on this panel, where do you think each should take the lead in B2B payments? What is sort of the unique thing where their focus ought to be different from one another? Anybody want to jump in?
I'll start, I guess. You looked at me, so I think there's like one really fundamental thing, and it's what got us past our fintechs, the enemies of banks, and vice versa, right? I mean, there may be places where a financial institution has capability, has some sort of traditional strength, and it can develop into that market from a capabilities perspective. But more often than not, the fintech is going to be far more nimble, far more focused, far more passionate about sort of the solution that they've identified to solve. And so I think there's an inherent sort of innovation favorite, right? And that's the fintech. Banks, on the other hand, have the customers, and we have the relationships. And so there's not much good to be had with a great idea and no one using it. And there's not a lot good to be had with a lot of customers and no great ideas. And so I think that's the place where, it's become more the norm. Maybe in another year or two, we'll stop even talking about the time when we were wondering if this would be sort of the disintermediation of the banks from their commercial customers and from their consumers. But they bring inherent capabilities. One is fast to market and the other has lots of customers.
This is sort of near and dear to me. I left a bank and joined a fintech who has always been about enabling banks versus disintermediating them. And I'm partial to this because I've fundamentally believed that when those are working together, it's a better outcome for the end user. And TD is a great example of it, right? So working with Bottomline, they were able to bring a solution to market probably faster than they otherwise could have done so, more specialized, more nimble, all of those things from a go-to-market perspective. At the same time, we'd be naive to think we could do it without Rick and his team's relationships. The relationship does matter. I think it's sometimes understated. The product and solution does matter, but you have to get your foot in the door. And then also, these banks have had long-standing relationships where the trust matters. Before someone's going to put their neck out and say, yeah, I'm going to try this new solution, who's standing behind it? Like, who are you? But they're glad that TD Bank is behind it, right? So there is a mutually beneficial relationship. And to Rick's point, I feel like in 2 to 3 years, we probably won't even be talking about it anymore. And I think the days where banks were partnering with a fintech, but almost keeping the fintech behind the curtain, acting like they weren't, those days are largely done as well, and it's more loud and proud. Here's the fintechs I'm choosing to bring to market and bring to my corporates because it's the best option for them.
Yeah, there's a couple things. I mean, there is going to be disintermediation, maybe not of banks in entirety, but of certain banks. And, you look, banks have relationships, they provide advice, they provide access to capital. That's a really strong player. Corporates are not going to just leave them for any reason, but they will leave payments. Now, we've seen in some of our survey data, they are far more willing to leave if they're not keeping up on payments. That is a massive indicator of we'll move that. They're not going to move the relationship because they get good ideas. They're an advisor. They're a trusted partner. They provide capital. There's just a range of services they provide. But the risk is with payments, I believe, because there's so much change. And not everyone's keeping up. So there will be some that are definitely losers. They're not keeping up with that, or they're non-winners, if it's a nicer way to say that. But they do have an inherent strength. And the other thing I'll just say, because I know you want to jump in a second, but that idea of the power of networks. So there's what's the value of a network, what you can do with it, how big is it, how you can leverage that. So there's interconnecting multiple networks, I think is going to be a massive win for banks. If you can connect to them, you leverage the power of the network of community for know your customer, signing up clients, connecting into other networks for settlement, for streamlining those payments. That is powerful. You've seen it with Swift GPI. That adoption is way higher than I think the most optimistic people would think. Why? Because it's solving problems. It's solving that interconnectedness problem. It's leveraging the power of a network. And so I think we're going to see networks compounded with networks.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.